Okay, I think I'm recording it on the cloud. Okay, let's go ahead and get started. Guys, welcome. Welcome to the October 10th year-end rally potential that we've got started here. Meetup. It's our meetup is sponsored by Investors Business Daily. We have over 2,000 members, and we meet the second Tuesday of the month. And at this time, between 7 and 9 p.m. And we're going to talk about a lot of the things that are going on in the market today, which is very interesting. So you can take a look at our site. You can Google the Charlotte Investors Business Daily Meetup group, and you can Google that site and sign up for all future events that we have. And again, we've got 2,093 members. Most of the work that we talk about in this meeting, it's derived from the book, How to Make Money in Stocks, that was created by the founder, William O'Neill. Unfortunately, Bill O'Neill passed away a few months ago in his 90s, but he left the concrete building blocks that I'm sure that will last for generations to come. And we'll be talking about a number of those principles in terms of this process that we use to design what we call an investment strategy tonight. Take just a moment and read the disclaimer. Basically, the disclaimer indicates that we aren't giving buy or selling recommendations tonight. Please conduct your own research. And CAN-SLIM, this is the acronym that was created from Bill O'Neill's research, where he searched 130 years to find out what characteristics and what criteria the greatest winning stocks consisted of. And this acronym, CAN-SLIM, it's covered completely in his book, How to Make Money in Stocks. But you'll hear the members talk about a lot of these concepts tonight, as Wes and I do as well. Okay, process overview. Okay, we're basically going to share tonight with you three different important legs of a footstool, if you will, that consist of a successful process overview. And that consists of using technical analysis, fundamental analysis, and macro economic analysis to make all your decisions in terms of what stocks to buy, when to buy them, based on technical factors, fundamental factors, and also the macro environment. And the things that we look at from a technical analysis perspective, and we're going to be talking about a number of these things. We consider the price to be the most important ingredient. You know, there's the old saying, the price rules, and we look at things like the MACD, price phase, stochastics. We use the point and figure charts, but most importantly, we try to be on the right side of the trend. And it's been, of course, as you know, a very, very difficult market for CAN-SLIM this year. In fact, in my 35 years of practicing this since 1988, this will go down as one of the most difficult years to uncover those stocks that typically have CAN-SLIM characteristics. Trend. Let me speak just a moment on trend. We believe that the market is in a short-term uptrend, and using any of the indexes, the NASDAQ, the Dow, or the S&P, when the 10-day EMA is above the 21-day EMA, that's designed to show the short-term momentum and the short-term direction of the market. We also are looking at the intermediate trend. Well, where's the intermediate trend? And we look at the 21-day and the 50-day to describe that relationship. And then long term, and this is really, really important, the long term is in an uptrend when you're above the 30-week moving average. When you go back and you study all the major corrections that we've had in the past, when the market is below the 30-week moving average for 2 consecutive weeks, that's really a sell signal. And you can go back and look at all the bear markets that we've had. And when you're below a declining 30-week moving average, the market is in a downtrend. Fortunately, last week, we closed above the 30-week, and we're above the 30-week moving average this week so far. And so that bodes well that we just finished a corrective phase, and we can potentially have a year-end rally based on the anecdotal information that we see right now. Wes is going to show you some charts that describe the breadth of the market. And we look at the breadth of the market just for context purposes. And it's important to look at the percentage of stocks above their moving averages. And we look at the 50-day moving average and the 200-day moving average. And that'll give you a context of, well, is the market overbought or is the market oversold? The market's been as oversold as it has been since the October bottom last week. We had some very climactic activity last week in terms of looking at the breadth indicators, looking at the new highs and the new lows. Wes will also show you a number of charts where we're looking at the new highs, and it's possible that the new highs will exceed the new lows for the first time in the next day or two. And we need that to take place because stock participation is so very important. We won't be able to move in a sustained uptrend until you have an expansion of that. And you can look at the charts that we're going to look at tonight. You can see how anemic any of the rally has been within in the index at any point during the year. And we just haven't had, an explosion in new highs exceeding new lows. That type of environment is always there in a healthy bull market. Now, sentiment, it's important to know what the professionals are doing. The professionals move to the sidelines many times right near the bottom. And you'll see that when we look at the NAAIM exposure index tonight that Wes will go over, you'll see that we got down to the lowest levels of the year last week. And we also look at things like the VIX and the put call spread. That gives you an indication of fear in the market. And we'll look at some things like the U.S. high yield index option adjusted spread to get a handle on, well, how's the economy doing? And finally, tonight, we may talk about some of the ETFs and compare some of the ETFs to each other to see, are stocks performing better than bonds, or bonds performing better than stocks, or what part of the stock market, the value side, or is the growth stock outperforming or underperforming? And the fundamental analysis, this is crucial. Bill O'Neill, you might think that he was known for the technical analysis that he talked about often, but Investors Business Daily has great research in which they've broken down the market, and they assigned their own ratings and rank based on earnings and based on revenue growth. This information can provide you all the information that you need to look at a stock from an earnings standpoint and from a revenue growth standpoint. They've got proprietary indicators such as the composite rating, which with one rating and one ranking describes, is this stock in the lower is it one of the lower performing rated stocks, or is it one of the highest rating stocks? It's important to do your buying in the top 10, the most strongest composite rating stocks out there. Most of the time, we're looking at stocks that have a 97 to 99 composite rating. And the reason that we look at those stocks is that those stocks are typically the ones that have true leadership, that go on to make 100, 200, 300% moves over a year and a half. When we bought SMCI earlier in the year, that stock had a composite rating of 99, the highest rank in the database. And I think that based on the correction that we've just come through, particularly in growth stocks and in CAN-SLIM type of companies, that we're probably, I believe, going to embark on the next major upleg that we've been waiting for almost 2 years. And it's I think that we've set the background with the washout last week and the whoosh to set the stage for a very nice, not just tradable rally, but a sustainable rally from here. In growth stocks, now you'll find a number of these growth stocks in lists that IBD provides, such as the IBD 50, and those are the top 50 ranked stocks based on fundamentals and technical factors. And in market corrections that have occurred in the past, when we have a new sustainable uptrend, you're going to have a number of those stocks that are going to be the best performers. And what you certainly want to do now, coming off of this market bottom, with the follow-through day that occurred last Friday, that signified a new current uptrend. The market is now in a confirmed uptrend based on the follow-through day statistics that we saw last Friday, which was a valid follow-through day. The market was up huge on higher volume than the day before. And we recently had a follow-through day a month or so back that failed. So you want to see, ideally, the market, if it pauses, you want to see it pause on less volume than the day before. Today, we had another accumulation day. The market went up on higher volume. So we have 2 out of 3 days where institutions have been accumulating stocks. And we have been in a distribution dominant tape for the weeks now. So we think that a character change has occurred, that it did occur based on Friday, based on the washout that we saw. So it's going to be very important to get invested here, to identify the leading companies that are going to lead the next market move higher, and we will share some of that information with you in the second half of the program. Let me make one point here on CAN-SLIM with market direction. 3 out of 4 stocks, 75% of the stocks, can't go up when the market's in a downtrend. Now, they typically tread water. And from a CAN-SLIM perspective, what you want to do when the market has been in a correction and in a down phase, you want to search for and identify the stocks that hold up the best. And we call that relative strength. IBD, Investors Business Daily, provides a relative strength rank and a relative strength line. And the rank rates that stock's performance versus every other stock in the database over the past 6 months. So that's very, very important. And then the relative strength line shows how the stock is performing in a graphical basis relative to an index such as the S&P 500 or the NASDAQ. And that provides you clues as well. And normally and typically, the stocks that take off, that have high relative strength, and they're the first stocks to go into new high territory, those are the leaders. And we are going to talk about what we think the leaders that are showing up right now in the last 3 days. And so these are the stocks that you're going to want to buy if the market pauses or pulls back. And if we're in the beginning of a 3-month rally, there will be plenty of these that pop up, and there should be. We should have some really terrific performance from a stock participation standpoint and a stock concentration standpoint. It would be quite feasible that you could pick 10 stocks and put 10% of your assets in these 10 stocks, and that this portfolio perhaps would double in the next 12 months. That's how oversold the market is, and particularly in CAN-SLIM, that we use the benchmark for the FFTY to show how growth stocks are performing. In macroeconomic analysis, we use a firm by the name of Hedge Eye Research. Keith McCullough is the stem winder over there, and they provide some great macroeconomic analysis that you may find useful. You can go to hedgeeye.com, sign up for a free trial, and we think that they provide first-class research from a macro perspective. And why is this important? It's important because at different parts of the economic cycle, different stocks do well, different industry groups, do well. So that's why macroeconomic analysis has a place in terms of satisfying your basic research as you establish your investment process. And with that, I will turn it over to Wes, and Wes is going to take you through the slide deck that we've prepared, and we'll actually send this out to you if you request it, and we'll send it out if you're on our mailing list. So with that, Wes, take over here, and then when Wes finishes, we'll take a 5-minute break, and then we'll get in on the good stuff. We'll talk about individual stocks, entry points, pullbacks, follow-up buys, position sizing, stops, and so forth. So Wes, let me turn it over to you now.
All right, could you just give me the share? Thank you. Okay. So yeah, I'll give an update kind of on what we're seeing and everything. This is the 10-year Treasury. This has kind of been a big headwind. I mean, it was in 2022. And then you can kind of see where it peaked, right? Where the 10-year peaked in October of 2022. That coincided really closely with the bottom in the S&P 500. And we were able to kind of, I guess, move somewhat, upward in the indexes from October until August, right? And then this 10-year perked up its ugly head again, and it kind of broke out in September and looked like it was off to the races for the 10-year. And all this kind of harsh pullback again occurred for us in September. And so this is still kind of one of the most important things that you have to pay attention to in the market. Rates clearly are an issue. Rates in the dollar. And when I was talking with Roy about this, we were debating the move in the 10-year. What's the extent that it could go? Sure, is 5 going to be a magnet? But if you look at this chart, right, in this year-long consolidation, that's kind of what we saw. Is if you're trading a stock, you're buying a breakout, a really clear breakout right here, and it's unclear, but it looks like it's in an uptrend. We changed our mind on the peak, and that we think the peak may be in already, and we'll kind of explain why. But we think this has potential to become a tailwind again. It's not friendly to the equity market when it's when the peak in rates is not in sight, but we kind of think that might have changed just last Friday. And just to give more context about the 10-year and why this is such a big deal, and I'm sure everyone here has been paying attention and knows that rates are up what 500% or something from the bottom. They hit their highest level in 15 something, maybe 18 years or something like that. Just last Friday, also 4.8%. So huge move. Clearly, it's restrictive. We're in restrictive territory in policy for the Fed, and that's working. But if we look at the inverse, right, this is the TLT, and it's not the 10-year, a little bit longer in duration, so it's 20 years or more. But it's a bond ETF, right? This is the long-term bond ETF. We actually took a position in this, I think this day, because of what we were seeing in the market. We were seeing basically, this undercut. We're seeing the commentary about how the U.S. debt is at risk of default, and there's horrible news, right? There's all this awful news, and inflation is going to be around forever, and this massive capitulatory volume that we think we saw here was kind of a signal that the risk is sort of skewed to the upside now in this TLT. So we actually did buy that, and I think clearly it's all about price and volume. We know the narrative. We know that the U.S. credit worthiness has never been worse, right? And we might be in this interest rate spiral, and so rates are going to go up, and who knows? And inflation is going to be here forever because our government can't stop spending. All that stuff is out there. Great. But we see this. This looks like huge capitulation in volume and selling right here. And so we took a guess, and I think a very educated guess, saying that we think the bottom's in, and just because at this point it doesn't hurt. We have some clients that have more bonds, and we took the opportunity to get out of that T flow, right? Because T flow is going to change with the Fed funds rate and could go from 5% to 0% overnight if something horrible happened. But you're locked in at that 4.5% rate, right? You're at the TLT, and upside with rates coming down. So anyways, we think also just longer term, this is the weekly. This gives you a even better idea of the serious nature of this last puking of TLT, right? So we were already down 50% from the high in 2020 in TLT, and that was painful enough, I'm sure, for anyone that wrote it down. And we just undercut this, and that's kind of the exact action you expect to see. And just I wanted to show the weekly volume, record weekly volume for 2 straight weeks, and selling action, and that's why we took that position. And we think that the peak in rates we think is probably in. And part of what happened too was what kind of confirmed the view was on Friday. We had this apparently hot jobs report, right? We had 300 something thousand jobs added, and rates opened up. They were up like 0.1% at the open, which is a huge move. And then slowly over the rest of that day, it kind of gave, or it sort of gave that increase in rates back. And it kind of looks like a news failure, right? When something exact opposite of what you would expect happens on the news, right? It's a buy the news event or sell the news event. That's kind of what it looked like happened here. On a hot jobs report. Arguably, if you look through that report, you could see that wages were up 0.2% month over month, and that's kind of a lower annualized rate, right? That would kind of show you wages up 2.5% annually, year over year, if you keep that rate up. So maybe I think under the surface, that was something that was important too. But anyways, it's a lot of this signature kind of happened where it looks like capitulatory action, and this. Go ahead.
In the evening. Okay.
Is that just someone in the background?
Yes.
Yeah. Okay. So yeah, interesting development there, and ideally, relief in rates it should be helpful for the market, right? We know rates going up hurts the economy, rates going down helps the economy. It lowers the cost of borrowing and improves
बेटा
liquidity for
मेरे
people.
को देख के अभी इतना खुश नहीं होता है
Uh,
I don't know who that is.
Okay.
मामा को देख के खुश होता है मेरे को देख के नहीं होता है कभी ए ले
I'm trying to find the person list, so to mute them, give me one moment.
Okay.
See what?
Was it Kumar? Okay. Well, anyways, so we'll look at kind of what happened with the increase in rates that we were talking about. Up until this point, we've had this relief in the IWM. But just to give you a look at, it's still been extremely choppy in the IWM. The broadest basket, I guess, of stocks out there has continued to chop around. And that's a problem, right, for people that are stock pickers. So, and similarly, we're going to see the FFTY, right, exactly what we've been dealing with. Now it's been 10 months. Clearly, we thought something had changed. The trend had changed in June and July. And a lot of these stocks were working, right? There was more participation. And that ended up being a rough head fake where the FFTY came in 20%. And so, if you're fully invested over those 2 months, you're on margin, that's a painful pullback, too. So, we'll see if we can repair from here. But clearly, it shows you that this move has not really gotten going. Again, right? So we're back to square one, and if you get in here, if we, if things can broaden out, there's going to be you are going to have a great year as soon as these things actually do turn around. And just to reiterate the extent of this, this style coming out of favor, and what can happen. We've seen where that's doubled, right? The FFTY doubled in the last bull run. You have a lot of stocks within that index that are going to more than double. But still,
Yes.
if you're, yeah, go ahead.
Yeah, let me make one point for all of you that are growth investors, particularly IBD followers and followers of the Ken Slim process. I mean, I've never seen anything like this in my 35-year history. And we're not going to change our strategy. We just want to find the stocks that are going to outperform. And notice where the FFTY is actually below the pandemic low. So you can see the panic that took place in 2020. And we're the FFTY, which is just a benchmark of really this strategy. It is, it's undercut that strategy, and you're down 59% since the top in November of 2021. So this is really unprecedented. And with the move back, you can see easily that, a move back to the 200-day right here takes you to 33. So, and that can happen, that can happen quite quickly. And we'll see if, we're looking at the weekly index here. So, we're 1 week off the largest decline that we've had in 5 years. And we're 1 week off the bottom. So when this index moves back up from 22 to 33, you're going to find a plethora of stocks that double and triple, and it's going to be wave after wave. We're seeing the first wave like right off the bottom, right off the follow through day, off the bottom, in the worst correction that we've had in history in the FFTY. And so when these stocks start showing up and making new highs, that's where the true leadership is going to come from. And you're going to have some of these stocks particularly in the security area, that can double and triple, over the next year and a half.
All right. Yep. And if you're still here
But
after 2
isn't that under
years,
the assumption that the interest rates will drop? I mean, we are not comparing apples to apples. In last 35 years, the inflation was not this high. I mean, I keep saying that we need to compare apples to apples. We need to compare to 1920s, 1970s, when the inflation was high and we were in similar scenarios.
well,
When
I
we're
don't
in
think
a
we have a similar Fed. Sorry, just
Yeah.
for one, he's not changed his tune ever. He's not going to be the 1970s Fed that let inflation go for a decade. And I think QT is a huge difference too. I mean, QT is a massive headwind to asset prices going up. So, I mean, obviously, we don't have apples to apples in any scenario. But Roy, what do you want to add?
The point that I wanted to make as well, and we have shown these charts in the past where we've overlaid the interest rates with the with the averages, and there are plenty of times when interest rates have risen and the stock market has risen as well. In fact, there are plenty of times when the Fed funds were above 5% and we're right smack in the middle of bull markets too. So, we're in a situation that we've never experienced before, coming out of a situation we've had a massive amount of quantitative easing to this, to a situation where we're having to tighten, and we've had this dramatic change in interest rates or a rate of change in interest rates in a brief period of time. And so that's what makes this market environment so challenging, is we've never seen this, but we have had plenty of times when interest rates were rising and the stock market went higher as well.
Right. So, yep. Anyways, if we move on from there, we'll a couple more charts here that we're just saying the same thing, but it's another index of IBD, the 85 index, a little bit longer term chart of that. And then the IBD mutual fund index. And their performance, just to see, of course, they're off the bottom, they're fully invested all the time, right? And these are the top mutual fund performers. So, if your personal account, if you're trading and you're fully invested all the time, of course, it might look similar to this. But yeah, so we remain optimistic. And I was going to say, I think a second ago, just if you're here after 2 years of this, you're not going to miss the next one. I don't think you're going to be worn out in another 12 months if that's what really happens. But we're kudos to the people here that are still chugging along with this.
And this, by the way, guys, just as a reminder, this is an index that Bill Neal chose, where he selected what he thought were the top 20 best growth funds that had the best 1 year, 3 year, 5 year, 10 year, and 20-year records. And these are the cream of the crop. And you can see, going back 3 years ago, there hasn't been any significant broad participation as we've just gone back to these levels back in 2020. Incidentally, we're not really fans of, we have not been fans of, say, a 60-40 just allocation, but I was looking at the Vanguard numbers that I had from the models that they present, and I have the numbers through September 30th, and a 60-40 portfolio from Vanguard's model has performed 1% per year for the last 5 years. So, it's just been a tough investment environment. So the question is, do we invest our money in something like that? Well, that's the returns in the past, but I think there's a high probability that this is a great time to invest in bonds and in the S&P. And so if that allocation works, you're really going to see where growth stocks, really outperform the S&P. So we think it's just a matter of time before the page is turned and the flip is switched. But we just don't know, well, what date, how long will it last? But I mean, it really is darkest before a dawn, in this particular strategy. So I want to emphasize, just don't give up, now when right before the market environment changes and starts to reward, growth stocks. Because from 2020 to that top, we had a number of stocks that just exploded, such as Teladoc, Zoom, Peloton. We could go on, DocuSign, on and on. There will be a batch of brand new leaders that lead this market uptrend to higher heights than you can ever imagine.
All right. Yes. So we'll just keep going here. And unfortunately, I'll talk about CPI again because we have this meeting every Tuesday right before it reports, and it's been market moving and everything for the last 2 years. Here is a chart right of the past, and here you can see it picked up in the last few months. September, this is the Fed's nowcast. They're expecting 3.8%, so that would be a little bit of an acceleration from 3.7% last year. I think importantly, you may see this come down also in October based on their forecast. So hopefully we just kind of get this small bounce in the longer term trend of getting back to that 2% target, which we still think is going to happen. And here's a look at the core CPI. Again, also coming down, right, and flattening out here, taking a brief pause for I guess a couple months for the core number, which maybe becomes more important as you see the gyrations in oil, which of course the Fed can't really control all of that. So that's just becomes noise, I think, at this point, the move in oil. And I'll say, we touched on this last month, and the same reason why I think core absolutely is on its way down, and it's just takes a long time. The shelter component is clearly a very lagging indicator, and from every other real-time indicator out there, this shelter component is coming down to at least as low as this. That's a third of the core. If a third of it comes down, what is that? 6%, 6 percentage points. That's a 2 percentage point drag in CPI. So this alone will get you there. There are some volatile points like used car prices, which I think, oddly, that's in core. I don't really know if that makes sense to be in a core. Maybe it does, but it doesn't matter. Anyway, so I think the larger story 12 months from now is inflation is crushed and the Fed will have to stop being restrictive. People that were talking about the big scary inflation monster also accelerating in September, the last month. They were all pointing to oil, right? Oil was up from July, the bottom, right? 50% or so, right? Whatever that is. Well, the same people that were talking about inflation, re-accelerating and pointing to oil will have to point to oil also as it comes down and say, okay, something's changed. And that's the price of oil. This became a very crowded trade. If you look at some of this futures positioning data, which we sometimes look at, and that kind of gave you a hint that something was about to break in price. And so clearly this is not a normal pullback in an uptrend anymore. This looks like a broken chart, and there are so many things that go in. I have no idea where it's going, but based on the chart, it's not looking like it's going to continue this strong uptrend, right? It's not going to be making new highs in 30 days and still becoming an issue for inflation. And who knows what the war does, right? I have no idea either, but clearly not a super strong reaction, unclear. So all that could be wrong if tension heats up even more over there. But as of now, that's a broken chart. Oil is not the inflation problem that people will point to in the next couple of months. Seasonality, I don't usually watch closely. And maybe coincidentally, it has been extremely accurate this year, where we had a very strong July, a so-so August, or peaked in August and had a weak September. If we care, we're entering the strongest 3-month period historically. We have this 3-month period right here, this chart or table, where you can see, it's the best performing set of 3 months, October to December. So that's kind of at our back. I will say that the reason why I point this out is I think that the peak in August, like August 1st or whatever it was, coincided very well with sentiment getting overly bullish. We'll see that this improved seasonality also coincides with sentiment getting very bearish. So I'm going to go through all the sentiment things now that are lining up, happen to be lining up with a typical seasonal bottom, and why we think there's a good chance for a year-end rally. Okay, so this is an index in the bottom of active manager exposure. So how long active managers are, how fully invested they are. You can see in mid to late July, active managers were 100% long. So you can't really get much longer than 100% long. And that timed it very well with the peak in the indexes in July. And so last week we actually had this come down to 36% long. And that is a very low level. We had a couple in 2022, a couple instances where we went down to 20%. The lowest was maybe 15%, 20%. So this is actually this is a low reading for this stock, and you can go either way, but having this at this level certainly bodes favorably for you if you're trying to get long and sort of call a turn. We'll also see that while bearishness bottomed here at close to 20% in July, we've doubled that now. We're at 42% bearish. And the bulls at over 50% have now come down quite a bit to 30%. Right, so this is all happening right on schedule with a pullback of the indexes. And then looking at the net exposure, so the bulls minus the bears, we have more bears here. Again, for the first time in, what is that, 3 months, 4 months? So that, is a good contra indicator that we maybe have a tradable rally from here. This put call ratio, this is a 5-day moving average of the puts to calls from the CBOE. And so, right, more puts would be more bearish, right? People, there's fear out there. People are positioned bearishly from that perspective. And this is pretty consistent, 1.2, whatever, something. This is pretty consistent with spikes we've seen in the past that also allowed for some tradable bottoms. Right here we have December, that's December of 2022. And it was not the bottom in the S&P, but it was the bottom in the NASDAQ. And then, of course, the COVID bottom, the COVID low, a big spike there. And not calling the exact bottom here, but very, very close. It's definitely something to key off of that you can, start to get involved. And, that's what we've done, just incrementally. And here's an equity put call ratio. So just looking at equities, there's a couple other variations of this, but I guess not as much of a spike in relation to that, compared to the other spikes in the equity, but still noteworthy how much it's picked up so quickly, the bearishness. Okay, and now we'll talk about breadth, because we know. So now we saw all these bearish positioning things, which is I think a great contra indicator. We can see how washed out we are too. This is looking at breadth. So stocks above the 50-day in the S&P. We were talking, we're not exactly sure if this particular daily data point is correct, but we did bottom down here last week, maybe at close to 10%. That is consistent with the October low, a big June push downward, and the March bottom in COVID. So, you know, you don't get much worse than that when you're talking about breadth. Again, this is looking at a data point that we're not sure the most recent, but coming down. This is stocks above their 200-day moving averages in the S&P. Not as washed out because, you know, it hasn't been as prolonged of a pullback, but still, you know, a very washed out kind of move. When you look at the March bottom as well, right? In March, when banks were failing, we came back to that 40% level of stocks above their 200-day. And so we reached that level as well. And we're just going to look at the NASDAQ. It's the same story compared to the S&P. And sorry, Roy, do you have something to add?
Yeah, back up 1 second. And just from a context perspective, guys, notice when we bottomed, I mean, we know there's been tremendous volatility in individual stocks. And one of the things that we're going to do right now is we initiated, I think, 8 positions in individual stocks, but we also bought some indexes at the bottom. So we're seeing clear climactic action, but there's been so much volatility in these individual stocks that we initially got exposure buying the QQQ, and we might even we plan on adding the S&P ETF as well, the spider as well, because you know, we think that this is a good way of getting exposure right off the bottom. And then, you know, in a month or two, you know, we might have additional stocks that continue to show up, and we might come out of the indexes and move more to the individual stocks. So that's sort of how we're playing it right here. So, you know, sort of with the barbell approach, because we do think we've got the right stocks, but earnings are coming up starting in a couple of weeks. And so we have that entire earnings volatility that you've got to put up with that's coming. And so that might be the most appropriate way of handling where the market is, you know, currently, and wanting to participate, but not having to go through an earnings report.
Yes, that is a good point, because especially looking at the other charts, you do see, you know, yes, we're oversold, and, you know, we're it could be near the low. If you have individual stocks in this, you might be, you know, you might see further volatility, right? Like this is a little choppy, and you might be thrown off your horse if you're in anything individually. But that definitely, you know, you should be able to sit through, you know, gyrations from here. And if you bought on the follow through day, that, you know, and you ideally you caught a very good turning point in these indexes. Okay, here's the NASDAQ and stocks above the 200-day. Again, same thing. This is actually lower than the March correction for participation. So we obviously we need this to change, right? We need more participation, or we would like it, right? But for now, I mean, this is why the Qs have worked, right? If you just have to trade what's setting up, and to be honest, like the mega caps are still the ones that are setting up the most. There's not a plethora of small and mid caps at this point, but you know, the mega caps and some certain security names, like Roy mentioned, we're the first ones out the gate, and you know, we're gonna just monitor and see if, you know, maybe we get another little pullback on lighter volume, and then we see stocks continue to set up. So that's kind of what we're looking at here. Yeah, that's what we have to do, right? You have to wait for the setups. And okay, I wanted to point out this is the QQQ. It's this nice down trend line of resistance. You know, just checking out what happened in the past where we have these these nice trend lines. They are meaningful, levels. Here's a follow through day that we talked about in August. This was on the JOLTS report, the job openings report, where job openings came down a lot. This was on the employment report also. So, clearly the labor market is what the market is, the stock market is watching. Just looking for some signs that inflation, convincing, I guess, signs that the inflation is going to cool. And the last thing that needs to really happen for inflation to be kind of under control is wages, because wages are maybe a little bit too high on a year-over-year basis to, consistent with the Fed's target of inflation historically. So, we're looking at this downtrend line. That's an important, that's an important level. Who knows what happens tomorrow? We'll see the reaction to CPI. We kind of think if you get a cool number, if it's not 3.8%, let's say it's flat or down slightly from the prior month, you might see, a really strong move through that trend line. But whatever, the jury's out. You can wait, right? The thing is, if you bought on the follow through day, get some exposure. That's the signal to get in a little bit, right? That's, O'Neill would say, buy something. It doesn't matter. Like, you have to buy something, follow your rules, right? But it might set up. I think we'll talk about how actually we think we're maybe a little overbought at this point after these 3 strong days. An oscillator that we look at, I just kind of threw in here. It's kind of a lame slide. It's just a number with no context for some people, but this is an oscillator that we look at daily, and it updates intraday, but basically minute by minute. So we like this, but it's a Dan Zanger tool that he uses, and like plus 35 is overbought, while minus 35 is oversold. I think it's done a pretty good job, and it moves kind of fast. So, near term, you may be a little bit overbought. So the setup into CPI is not as favorable just because of what we've done in 3 days. So that's something to consider. And, we just want to see a calm, tight pullback to be able to buy, maybe get more exposure in the indexes. And, if stocks continue to set up. So that's kind of how I see it set up going into CPI is a little bit overbought near term, but intermediate term, we have all these negative sentiment things that are good contra indicators for the year end, I think. Okay, we've got a few more slides I'll go through just for a couple other ones that we kind of typically include. This is the NASDAQ and the MACD. We have a buy signal on the MACD with that crossover. And so, that's important, right? Take that seriously because, especially where, the level we're at a lower level than we were at this last buy signal. And who knows, right? You have to consider that things have improved based on this technical indicator. I know we're hitting this 50-day. It's a logical place to take a pause. And it did today, and it did, ahead of this newsy item tomorrow too.
Wes, I think the PPI is tomorrow and the CPI is the next day.
Oh, am I mixing those up? Okay.
Yeah, I
Really?
believe.
Are they usually? Okay. So yes, CPI. Really, I feel like CPI is usually the day after this for us. But all right, CPI is Thursday, PPI tomorrow. Anyways, yeah, we'll verify that. Here's the NASDAQ, the broader basket, right? The Qs are just being 100 and a little bit more top heavy, stronger index so far. Here's the same downtrend line. I think in an ideal world, right, this thing doesn't run up and take out that trend line in a day, right? The CPI or whatever in the next few days. Ideally we can chop around, go sideways, retake the 50. This 10-day could cross over the 21-day, which would be supporting of the change in trend, and we can kind of hang out here until we consolidate for just a couple weeks, and take out that downtrend line. But that downtrend line, I think, is going to be, prove to be important if we're going to really launch into this year and rally. Okay, and on a longer term basis, we usually talk about the NASDAQ and 30-week moving average. So this is a weekly chart of that. We have not had a close below the 30-week average, but we did come into that, longer term support. So that's good. The S&P similarly was, on the cusp of closing last week below that 30-week average. And if we had two closes below that, we would, have to reevaluate and consider the longer term trend was down again. Fortunately, the market found support and closed kind of right at that 30-week, and now we're sitting here above the 30-week in the S&P. Okay, and this kind of shows you, yes, the follow through day, you didn't have a bunch of new highs, right? But you did have an improvement in new lows and some pickup in new highs. And this is the day, what is this? Maybe a Tuesday, Monday or Tuesday that week, where you saw a big spike in net lows. So just showing again, this is kind of comparable to the horrible breath you saw in March. Not quite as bad as what you saw back here in the October low. But the point is that could be it, right? That could have been the last kind of shakeout, scary day for the market with this. And so we're days away from these indexes being above the 50, which would mean, a lot more stocks getting above the 50 as well. And for this turning positive again. And,
Yes,
hopefully,
by the way, let me just mention that John Boyd does a lot of work where he charts a lot of the net new highs, new lows. And last week he showed that we had minus 2,537 net new lows for the week, and that was the highest. That's the highest level that we've had since the October bottom.
Okay.
So that's just it's just from a context perspective, shows you how washed out we are, and the potential for the flip to switch here.
That is a good point. Yep. That's a huge number. So, okay, well, anyways, here's the NASDAQ longer term, 5 years with a net new high number or new lows again. This is the McClellan oscillator. So this is kind of similar to that random number oscillator that I said goes between minus 35 and 35, or it can go higher, but and lower, but those levels that we look at. This is actually not updated for today, so it was a little delayed. But it's possible that this is already in overbought territory again after today, or at least it was intraday. So that's kind of why the setup is, after a big kind of bounce, we're just looking for a little bit of weakness to add indexes, really. The VIX, this was an indicator that never spiked to a level that we were looking for all of 2022. So longer term, right? We look at that VIX hitting that 35 level multiple times. Apparently that was enough, right? So we're not going to be concerned as much, I don't think, as the level as the, I guess, quickness and change in level, right? So a spike from 13 to 20 in 10 days is a big deal, right? It's I guess it's still just like it's still a significant increase in a short amount of time, just like going from 20 to 30 is a big deal in the VIX when that goes up 50% in a short amount of time. Okay, and no, this is the last one, the last slide actually, and this is the high yield spread, so the measure of creditworthiness in I guess in corporations. So as this goes up, this kind of implies that the creditworthiness of corporations is declining. And it was curious why it wasn't really moving. We didn't think it was moving too much at all with this kind of pullback. It finally did, but this is just something we always look at to understand what the bond market is seeing, and if it's something that needs to be seriously considered, right? I mean, it always does, but this, it's just another, I guess, look at the overall quality of the economy. So if you see this spiking, that would indicate a lot of fear in the market as well, and the bond market can sometimes see things first. So that's why we kind of monitor the bond market from this particular indicator. Right, that would be it.
Okay, guys, let's take a 5-minute break here, and then we'll come back, and then we'll get into the meat of the individual stocks. Are you looking at MarketSmith right now on your screen, guys? What am I sharing?
Yes.
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 Okay, we'll see you in 5 minutes then. Let's just take a 5-minute break. Okay, guys, welcome back. Let's get started. Let's go over the stocks that everyone is here to really take a look at. We're gonna show you what the stocks that we bought in the last 3 days, and we think that these are the potential leading stocks. Of course, there will be more of them, and then we'll cover some that we don't own that are showing a great action as well. But there's the old saying, you can't kiss every baby. So we want to be in a position where we've got 5 to 10 stocks, and in a great market uptrend, you're going to see five of these 10 stocks that are going to double for in a full market cycle. Where they beat and raised the numbers for 8 consecutive quarters. That's really what we're looking for. And you're going to see that if we're in the beginning stages of a new bull market. So these are the stocks that we own. So I'll take it from here. You can see CrowdStrike, which is in the security industry. Recently, CrowdStrike came out and raised their numbers. They raised their cash flow numbers and their earnings estimates. So they had a great quarter last quarter, and the stock moved up on higher volume. And so that was right there. It was showing that it had tremendous strength. It's also in the AI area as well, where there's talk about the tools that they're developing have artificial intelligence qualities. They're implementing that, and there's all across the security apparatus that they provide their enterprise users. So this is showing the stock moving strongly before the follow-through day, and there's the follow-through day. So the follow-through, when you're what you want to see is you want to see the stocks that are first out of the gate on the follow-through day. And you can see that this stock gave you a clue last earnings quarter, but here's the follow-through day. So the stock had a powerful move up 11 that day. So it followed through the next day. It's consolidating today. You can see the 10-day, and the market can pull back, and the 10-day is 172. So it is a little bit extended. Now you want to see it consolidate, go sideways, but you can see the accumulation and the volume that came in. See, 2 out of the last 3 days. So this is powerful institutional interest and institutional buying that's taking place. And again, looking at the fundamentals from CanSlim, what do we have? You've got a stock that went through the bear market, but yet had earnings of 135%, 57%, an acceleration to 84%, and now an acceleration of 106% on great revenue numbers that are accelerating. So O'Neill found that many of his greatest winners had 3 consecutive quarters of accelerating numbers, accelerating earnings numbers, and accelerating revenue growth. That many times these stocks turned into true market leaders that went up multi-fold over the course of its market cycle. So we certainly think that this stock, with a 96 relative strength and a 99 earnings per share rank, is one of the premier stocks in the marketplace today. So you take a look at this stock on a weekly, and you can see it's just consolidated. So there's the bear market bottom. It's consolidated. This is the first week breaking out of the base. You got a perfect buy point right there. So it's one of the leading stocks. Coming out of a market correction, you would like to have some industry confirmation. And in other words, you'd like to see more than one stock in that sector do well. Well, indeed, you have that confirmation. You've got that with Palo Alto Networks. and which is breaking into new high territory. Notice that, this hitting the, 52-week highs right now. So your buy, the premier buy list that you want to look at right now, it's the 52-week high list. CrowdStrike's at the 52-week high. Palo Alto Networks is, at a 52-week high right here. And who else is in that group? CrowdStrike, Palo Alto.
Zscaler, Roy.
Yep, Zscaler. So Zscaler had the same type of breakout. So you've got actually 3 stocks, and it's really, you could buy all 3 stocks. You could buy 1 stock. You could buy 3 stocks with a 5% position, or one of these with a 10 to 20% position. But the market's been so volatile, it's showing you that this is where the leadership is. And you can see I've got alerts drawn on, many of these stocks. We bought CrowdStrike, and I actually bought CrowdStrike and Zscaler personally. So I ended up buying 2 of them 2 days ago. So it's breaking out of the base, but notice the volatility, see, from 167 to 146. Well, you got stopped out. If you bought it, taking out the pivot at 164.29, if you bought it right there, taking out 164.29, you got kicked out. But it has quickly recovered. It's in new high territory. And again, you've got the financial numbers that one would look for these stocks that can run for multiple years and go further and longer than you might imagine. You can see the old high. See, it's the old high in price. You got a long way to go, but I would this stock could clearly recheck this old high over the next year in a great market. So those are the 2 security stocks. Next, Eli Lilly and NVO. They both have got the powerful blockbuster drugs, and these are acting great. Eli Lilly is acting like a growth stock, and so Eli Lilly had a great earnings quarter. This is a terrific company that's got a broad pipeline. As you know, it's well known and well respected in the industry. But it appears that the two companies that have the weight loss drugs, that these potentially can be the biggest drugs that have ever been formulated. And you can see that based on the stock action. So the stock had a great move, showing leadership while we were in the corrective phase. Then you had your typical correction as the market came in from 600 to the 50-day, and then a rebound off the 50-day. So you can see, the stock rebounded off the 50-day, and there's the follow-through day. Normally, these stocks that come back to the 50-day and stay there for a longer period of time, that's not as desirable as a stock that just hits the 50-day for 1 or 2 days and then bounces off of it. So that's showing you more strength there. So Lilly bounced off the 50-day, an institutional stock that has certainly long-term implications for a company that can potentially perform for many, many years. So it's a leading stock, 97% relative strength, bouncing off the 50-day with a great blockbuster drug. And of course, you've got terrific institutional sponsorship, 4,500 funds on the stock. The next, Meta perhaps has one of the best patterns. And, interestingly enough, we didn't buy this stock because you had, we didn't buy the stock earlier in the year because they had these, very negative quarters. And, Can Slim it's been designed to find the great winning stocks in the past. And all those stocks typically have very strong earnings and revenue growth. Here you had a stock where their earnings were cut 49%, 52%, minus 3%. So it just didn't have the numbers that you're looking for. Look at that, 1, 2, 3, 4, 5 straight quarters. We would like to buy a company that has 8 straight positive quarters, not 5 consecutive down quarters. And it was, this stock obviously was hated, was washed out, and the stock is actually quite cheap on forward numbers looking forward. And the stock is, of course, performing well. And they also have an artificial intelligence application that's getting rave reviews as well. So that I'm sure that has something to do with the stock moving up. But it's a cheap stock based on the numbers. It qualifies to have a blue dot rating. That means the stock's got a high relative strength, and it's near or breaking out of a base. You can see I have this trend line that's drawn right here. And you look at this stock on a weekly basis. I mean, daily, this thing just hasn't. This stock really has had just a very nice stair-step pattern, and it broke out 3 days ago. So, if the market comes in for a day or two, you might see the stock, come back down, to the 10-day. It's 3.8% above the 10-day. But, the stocks, if we do pause here and come in, it's showing great strength, broke out of that 312.87 pivot. And again, we bought the stock 2 days ago and actually pressed it today. Nutanix
What are those circles?
Yeah.
There you go. Like along that line there. What are they?
Institutional selling. Institutional selling. But for a major company like this, it's incidental. It doesn't really have any type of predictive value.
Okay, so that can be turned on in Market Smith. I didn't know how to turn it on. I'll figure it out.
You can turn it on, and it's actually we find that an application called FinViz provides a lot of the great insider information and fundamental research, and it's a very cheap program as well that has a lot of adaptability and functionality, and things that you can configure the way that you want to with that program. That's really good. And they've got a great module that shows all the insider buying and selling for the executives of the company, the shares that they still own, the shares that they've acquired, and so forth. So you might find that at FinViz. So a great weekly chart. Look at the weekly move, the consolidation, and now you're seeing the stock close to breaking out. Doesn't have far to go to take out the all-time high. And as you guys know, we really look for those stocks that are making all-time highs, not just a 52-week high. Those are the stocks that can be rocket ships. See, look at that SMCI that made an all-time high at 40 a year ago, and we didn't buy the stock until the stock was much higher, maybe in here. I think we bought that. We ended up buying that stock at 93. At 93. That stock had a big move, broke on earnings, Now, incidentally, you do have a double bottom here. And it's just this stock is so volatile, and it's so volatile and choppy during this period here. And the idea that it broke badly on earnings, stock was down $81, 23% on the earnings report. Certainly makes me wary of taking a stock like this into another earnings report, but it is achieving what you would want, where the stock has made a classic double bottom where it undercut 235. And, when you have these undercuts and a double bottom base like this, you can also use like your point and figure chart and Livermore and O'Neill both, they had something they called the shakeout plus 3. And I like to look these expensive stocks. I like to look at 3 boxes, 3 point figure boxes that take place, and that's your buy signal, not just a shakeout and 3. I know Jim Rope uses like 10% off the bottom, but I like to use the point and figure method when you're guessing that it's putting in a double bottom, and that gives you an earlier entry into the position. And then you can see followed by the pivot of 287.74, which was actually your buy point right there when it took out that 287.73. And now you saw the stock had a massive move today, but it still needs some work in terms of setting up. You had one opportunity to buy it, and now now it's going to put in a base probably. The next stock that we bought that's showing great relative strength is Nutanix. So it's a stock that is in this virtualization, storage, cloud industry. It's a competitor to VMware. Maybe you guys have heard about that stock, VMware, that I think that was bought by either EMC or Dell. But the stock has had tremendous earnings quarters. So look at the earnings quarters where they beat. There's 1, 2, 3, 4, 5 quarters, and with great earnings up 168%, 600, 400, and 241. Remember, O'Neill in his work found that the greatest winning stocks needed to have an earnings per share growth rate of 20 to 25%. 25%, I believe, is a correct number. And revenue growth that will provide that 25%. Wes and I are constantly looking for the stocks that have triple-digit earnings growth. Those are the ones that can be the most powerful stocks out there. When I met David Ryan, who was a protege of Bill O'Neill's I met him in 1988, and I had a conversation with him in terms of identifying some of these great winning stocks. And back then, at that time, he had found that the stocks that had an earnings per share rank 99 with a relative strength of 99 were so rare indeed that many of those stocks turned out to be big winners. Those that had the greatest fundamental ranking and also the highest relative strength. And what got Wes and my attention to this stock is the last earnings quarter, where the stock moved up 12% on 497% earnings, 97% volume increases. And I've also identified that as a metric that many times or that provides the launch phase of these stocks that have tremendous moves when they gap up. And, you know, some people, they're afraid of buying a stock that gaps up, but the stocks that gap up and go sideways and don't come in very much, many of those stocks have the most powerful advances out there. And some of the stocks, you can see Nutanix, that when it gapped up here in May, pulled all the way back to the 50 days. So more than likely you would have been stopped out if you bought it. But it's setting up now again. We bought the stock yesterday on the inside day, and then we pressed it, taking out 36.71 today. And you know, you've got plenty of time. You've got 6 weeks until the next earnings release, and many times you have what's known as earnings drift that takes place, where the stock just drifts higher, you know, until the next earnings report. You have plenty of time for that to occur, and plenty of time for this stock to move, you know, over the next 6 weeks into new high territory. So it's got the technical pattern that you would want to see. Notice how tight this is. You know, from the correction, it finally came all the way back. It's gotten really, really tight over the last 6 weeks. And a move here higher suggests that the stock has, you know, much further to go. So said that's the monthly. So you're going to see, you know, some of these IPOs like this stock make a new high and then go potentially much higher from, you know, that old high, the all-time high. So for example, if you take a look at CrowdStrike, so you can see the stock can go to 60 before it can double before it gets back to its all-time high in price. And what I'm predicting is the funds can really start when the IPOs go through phases like this. This stock's been going sideways with this due diligence phase for the last 5 years. And then finally, when they break into new high territory, then they can move. See, when CrowdStrike broke into new high territory, that IPO came before the pandemic. You know, it dropped 65%. And then the stock moved from 34 to 300, a 10 bagger came all the way back, a 10 bagger. So it led the market higher, you know, during that period of time. Why can't something like a Nutanix, with the earnings growth they have, we're going to get a few of those. I'm sure you guys will get a few of those as well, but it's showing you the classic strong type of chart that you want to see at the beginning of a new market uptrend.
Hey, Roy, can we take a look at Pure Storage, PSTG, in the same space?
Yeah, absolutely. PSTG had a 10-300 day today. And I was looking at was it PSTI, PSTG that was up? PGTI. Okay, PGTI had a 10-300% today. So let me go back to Pure Storage. And we actually talked about this stock. Remember Amit during the last meetup group?
Yes.
This stock was setting up great. See, remember the last meetup group, which was in September. It was making a new high, and then it came in. And now the stock has a little bit of work to do. And you know, the stock had a really good earnings report here to get it going. You know, it had really good action. The stock broke above its moving averages, which is what you want to see on an earnings report. And really, it's really had this wide consolidation. You know, decent relative strength decent earnings per share rank, but it's got its work cut out. This isn't a great, where do you buy it? It's not a great chart. It's sort of wild, wide and loose. And you've got plenty of time to the next earnings report.
And
So
it doesn't have the earnings growth like Nutanix.
Okay. So it's under the averages versus being over the averages as well. So that's a flaw certainly in the chart. What was the other one, Amit?
Oh, no, this was the one.
Oh, just this one?
Yeah.
Okay. NVIDIA, which, this has been my biggest position off and on during this volatile period of time. It's interesting that what got the stock going was a great earnings report where they raised their earnings estimates by 50% from this quarter to the most recent quarter. And certainly they every report that I've read regarding NVIDIA and their AI chips, they're sold out for the next 2 years. There is going to be a competition. AMD is going to be launching. They're working on their chip that will be launched in the fourth quarter. So they've got that coming this next quarter. And it certainly competition will always be there, as the market gets bigger and bigger and more lucrative. But I mean, NVIDIA owns the market right now. So the question, that you have to ask yourself, and that I ask myself, is this climactic action? Is this climactic? And can this stock take out 500 and go to $1,000 over the next year? And I do. I do think the stock can go from 500 to 1,000 over the next year. But the stock's going to have to perform. So the stock is just getting back over the 50-day moving average, the 10 days crossing the 21-day. But it's taken a long time for this stock that sold off, got down to this 409 area. And it was really ugly, right there, at the bottom. And it's taken a long time for the stock to come back and challenge, its old high. So it's really sort of acting lackluster right now. And, in fact, if this stock would break the 50-day now on significant volume, I would question the stock's future performance. But this stock's got the biggest numbers on the street, and the numbers are just going to be terrific, over the next couple of years. And this is the leading stock in the market. It's an institutional favorite. It's in AI. It's in the semiconductor group. It's got a lot. You really just only need to buy one semi, and buy the best one. And this is the best one. So, you're going to have to, earnings are 42 days. So you've got plenty of time. What would be nice? And again, we just bought the stock. Back going over the 50-day, break back over the 50-day, which is a technical buy signal. And, and the stock consolidated for a day and then took it out. You'd like to see the stock just continue to make progress and, see if we can have this upward drift going into the earnings report. And, and if you have a nice profit up here around $500, you can you can potentially hold that stock into the report, or sell some covered calls on it, or buy some puts. But this would be our number one institutional ranked stock where there's liquidity. And, you know, we think the upside is, you know, is terrific. You know, again, notice when the stock went sideways, and then you know, this stock went sideways here in 2018 and 19, and that bear market corrected 50%, went sideways for almost 2 years, broke out, you know, that 70 area, and then tripled, you know, in the next 2 years. So it's got that history of, you know, once it gets into new high territory, you know, it has its periods where it goes, where, you know, you have great progress, and then a consolidation, further progress, consolidation, pullback, and so forth.
How about that
PDD?
NVDL, participating in NVIDIA with NVDL, Rory? Any thoughts on that? Obviously, it's a lot.
Of using this NVDL as buying this instead of NVIDIA?
Yeah.
You know, I mean, I think it's can be, you know, I think you'll have very similar percentage moves. I mean, this will be 50% more, you know, 150%. So it's just a matter of your risk.
More volatile short term. Okay.
Yeah, I mean, I prefer non-leveraged securities, and I'm not averse to, you know, buying, you know, 1,000 shares of NVIDIA versus, you know, 10,000 shares of NVDL. It makes no difference, you know, to me. But, you know, a lot of people think that, you know, you can't buy as many shares, so I'll buy the one that's cheaper, and, you know, so forth, like, you know, like Berkshire Hathaway and so forth. So it just means, you know, and, you know, if I buy a leveraged stock or an ETF like this, you have to almost get it you exactly right in your timing, because if you don't, you can find yourself down. Instead of 3% in NVIDIA, you can be down, you know, 6.5%, you know, at a moment's notice. And, you know, it's, you know, if you're using you know, an 8% stop, you'll certainly have the potential to get kicked out of these leveraged.
Yeah, flipped out real quick. Yep.
Yeah, and, you know, and it's only and it's just normal action. And I still use, if I buy a leveraged instrument, I mean, I'll still use a real tight stop, you know, even, you know, leverage. It just means it's got to work, you know, immediately, because next thing you know, you're down, you know, 15 or 20%, or, you know, 8, you're down 12. So, yeah.
What do you think of CyberArk?
Did you hang up your phone?
Okay, so this is an Israeli company. They're in the security area. Was that Amy?
Yes, it was.
Yeah. Hey, Amy. You know,
Hi.
it's an Israeli company, and it doesn't have the relative strength or the earnings profile that you have on the others. You know, Palo Alto, CrowdStrike, and Zscaler all have triple-digit numbers, and, you know, really strong numbers. And of course, the market cap, Amy, is telling you something. Well, it's just not the leader. And I've owned this stock before. You know, the earnings per share rank is, you know, 68, so that's moderate. You know, not good. And the relative strength's not great either. And earnings are in, you know, 20 days. So I definitely prefer the other ones.
Okay, thanks.
You're welcome.
Roy, may I ask a question about NVIDIA?
Yes.
I mean, it's the best stock, but in the environment of high interest rates, what is the potential? I mean, it dropped significantly, and it's hard to believe it will go to 1,000. With such a, valuation is very high. My concern is, the interest rates will not go down anytime soon. And what is the potential of the NVIDIA dropping?
Yeah. So
on a
okay,
bad earnings season, and it can just really go down. That is my thought about NVIDIA.
Yep, it's okay. Great valid points. First of all, we never use PEs. O'Neill never found that PEs for growth stocks ever were, and all the great growth investors that I know don't even look at PEs. However, just from a textbook valuation case, growth stocks do well when interest rates are lower. And there's a headwind from a valuation standpoint because they're valued based on the future cash flow, but the present value of the future cash flows, bring them back to today, and higher interest rates make them more expensive. So, but we think that is the question in the market right now as well, Alex, that if it's all about interest rates. So if we take out that high, in the 10-year, it's going to be problematic, to the market. But if that was the high 2 days ago in interest rates, if that's the high and you pull back and interest rates come in like they have in the past, we're fixing to get the mother of all rallies. So if you see that, this 10-year come back into the 50-day, that's going to set the stage for a mammoth year-end rally. And that's what we don't know. We don't know we can't predict where interest rates are going to go. But the CPI, that's coming. Rates peaked at 9% CPI, and the models that we've looked at suggest that we'll be in the 2% range, but it's not going to be 2.5% range. It's going to take another year to do that. But it is possible that we had this big short covering rally. That we had this big whoosh in rates, and that we're going to, and that rates are going to come in right here, leading to, a big short covering rally.
Mm-hmm.
But if you take out the high, these growth stocks, they will be penalized. They should be penalized. They will be. So because that's the number, that's what everyone is watching in the marketplace today. We're very attuned, and what's going to be interesting is if you come in a little bit, look at how the October bottom of last year, where rates peaked, you came in and then you rechecked the top. You had a double top there in interest rates. So it's possible that, these rates could, we could come down here to the 21-day. Come down here to the 21-day and then rally back up a couple of days and then put in like a double top. And, and that would also lead. In other words, if the CPI is not friendly, rates could come back and, come back up for a couple of days and put in this double top, and then rates can go lower from there. And simply what that would mean is that all this stuff is discounted finally. But, that's what you would ideally, you'd either want rates to come straight down, or if you came in and had a double top and then turned down, you're off to the races. See, there's the October bottom of last year. So, we think that the ingredients and the October bottom, in terms of context, the sentiment was so poor. We're as bad as the October bottom, and the breadth is almost as poor as the October bottom. And so we think that's setting the stage, you know, for a year-end rally, and it will be significant.
Mhm.
Would these stocks go up? I mean, it's conceivable that you could have 10 stocks and that, you know, they go up 25 to 50%, you know, in the next 3 months. And they're going to be in growth. You know, growth is good. You know, growth is going to give you that. You're not going to find that in cyclical, you know, a number of cyclical stocks. If you don't have it in growth, the timing's just not right yet. Again, it was another, you know, fake out.
Thank you.
You're welcome.
Hey, Roy.
Yes.
Hey, it's Mark.
Yeah. Hey, Mark.
Hey, can you comment on Palantir, either you or Wes? It's my 4th largest position. I own it just under $7 pre-IPO. And I know you guys have been talking about it lately, so I'm just curious on your thoughts long term.
You know, Palantir was founded by Peter Thiel. You know, he's a famous investor, and he's brought many companies public. And we actually bought Palantir earlier on this May breakout, like at 11. And then we bought, and then the stock moved up, came in, and we actually bought the stock all the way up before the earnings. We thought that the stock was going to have a massive earnings beat. There's an analyst that came out with an earnings, with his earnings report that we read before the quarter, and he thought that by far this was going to be the #1 artificial intelligence company in the world. And you know, this company was founded to do work for the CIA. And, you know, they have, you know, their contracts are with the National Security Agency and the CIA. That's their 2 primary contracts. And they've got tools, and, you know, Alex Karp, I think is his name, the CEO. He's had some, you know, pretty good YouTube interviews, so I would definitely suggest all the viewers to watch, you know, some of that. But we thought that this stock was the premier stock, and then you got hoodwinked on the earnings report. They were conservative. Stock got hammered. We got stopped out, and now the stock's been building this base for the last 2 months. Earnings are in 28 days, so it's been persona non grata, Mark, you know, during all this period of time right here at 13. And I actually bought the stock. I bought the stock back, you know, a little bit of the stock back right there on that pullback a week ago, just to have a pilot position so I could watch it. It broke back over the 50-day. It got my attention. And then I bought just a little bit of the stock on the pullback. Now, what this stock needs to do, it's making this cup. So it's going to, it needs to go sideways, build some kind of base, it could handle here. And that's what I would like to see it do, is just go sideways. And then on the earnings report, come through with a great report. And the stock has a 10-300 day where the stock's up 10% in price. It blasts through 20 and 24. And, you have and you press your position in it. That's ideally how I would like to see the stock act. But because the stock had such a poor reaction to the earnings report last quarter, there's no way that I would hold this one into earnings, just like SMCI. The odds are if it has one bad quarter, it's going to have another bad quarter. And a bad quarter would be all hype and not numbers. I mean, these numbers are good on a percentage basis, But look, they're doing 1 cent, 4 cents, 5 cents, 5 cents, doing 2 million in revenues. Now, for the it could have been Alex that talked about valuation. You know, I never consider PEs, but I do look at price sales. So I think price sales is a great way of, you know, of seeing, well, you know, value in a stock, you know, and, you know, you look at price sales, this is a stock doing $2 billion in revenues. You know, is this going to be $100 billion company? You know, that's a pretty big market cap increase with only doing $2 billion, you know, in revenues. So, you know, the stock just has to come out. The stock has to have a great earnings report, and it needs to act great on the report. It's not necessarily the number, but it can be the guidance. My take from the interview was Carp, I believe, said that he's increased his client base in AI by 50% from last quarter to this quarter. So his client list has increased 50%. But these are people that are using some of his tools that aren't paying for it. So it may take a little while. He might be just trying to capture market share right now. Just sign up as many people as he can, you know, like Amazon at a loss leader, and then you convert them to clients, and then you have these massive increases down the line. But you know, so I'm waiting for a great quarter. But you know, certainly this company has got great, you know, AI potential. You know, to me, NVIDIA and Palantir are the top 2 AI companies in the world. You can throw Adobe in there. ServiceNow is going to be in that area. Salesforce. Yeah.
I just want to point out to Mark, because you said you're in at 7, so you can sit through earnings, right? Absolutely, too. Just to be clear on that, right? Because you're up 100%, and you want to hold this thing for, you know, 5 years or whatever. Who knows? 3 years, right?
Correct.
So you know, for you, I don't think you need to sell ahead of earnings, right? Like, you know, if you can't take a position on 5 days before earnings, right? But we always advocate holding, I guess, or not always, but if you have a profit, it's much easier. And I just want to add, because I do love this stock, and I hold a bunch in my IRA right now, but definitely the customer base is growing. That's important, and you can see the announcements they're putting out on their website. They put out, like, you know, 10 announcements about new contracts and new things, and they've had all these AIP cons conventions where their own customers are demonstrating to their competitors how they're using it. And I think that's crazy. It's like it has something that most companies don't have, which is like outstanding customer growth, right? And he has said that he doesn't have a pricing strategy, which is a problem, I think, for most people. There is no pricing strategy at this point. And so, you know, it's hard to say, right, if the earnings reports are going to get it going, because they might not have the numbers to come with it. But the fact is, I mean, I don't think these new things that they announce that you can follow along on their website are new contracts. And I highly doubt that these things are incorporated into guidance, because they never want to count on closing a deal. And it also takes time to ramp up and everything, right? But the fact that how quickly, I think, has been really impressive in 5 months to get this, you know, new AIP whatever product out. So I don't know. I'm a big fan of it longer term too. So yeah, and you know, and I just to add on price to sales, like I hear you on price to sales also, Roy, but also thinking, like, if it's a SaaS company, I kind of consider, you know, a SaaS company trading at 50 to 100 times earnings is not crazy. So if you can think, you know, it seems reasonable for them to do $1 in earnings, as they scale up, right? It's not crazy to think of somewhere this thing trading 50 to 100 in price. But you know, if you don't have a position, now, I think you basically can wait till the earnings reaction, and you're going to see something probably in the report that'll say, a bunch of analysts are going to ask about pricing. I assume, monetization of this new customer base. If they can have convincing evidence of actually monetizing, that's probably what kicks it into gear, really, to start the move. That's my take.
And Mark, if this stock breaks above 20, I mean, we'll own the stock. We'll own the stock, and we thought this stock would go from 20 to 40, and then 40 to 80, in the next couple of years. But you had that disappointing month, but it's come back. But it's got to take out that 20 area before we would, really get involved again with it after getting stopped out. Wes, why don't you take the next couple right here? We just have a couple left here, and just to provide your insight here, and I'll just go
yeah,
along.
sure. Yeah, well, this is one, of course, we bought on the fall through day. Chinese stock. Yeah, we've been, afraid, I guess, or timid to get into these Chinese stocks because you never know. And we were recently in LI and got kicked out of LI, another Chinese name. But I mean, it's just the stock action is telling us to go. It took out that 103, right? That downtrend line took out 103.60. Then it took out that 106.38 back in January. So it's been on our radar, and this is basically our short list of 11 things that we have here in this list. We bought like every one of them on the follow through day, and we were talking about them the day before the follow through day. What are we going to buy? This action was great. It's people kind of stampeded into it for 5 straight hours, where intraday it just didn't, it never let up. And so we jumped into it. I think we did wait even until I think like 1 or 2 or something to buy that position. What's kind of given us pause too ahead of actually making the purchase. We recognize JD and Alibaba, for example. 2 other retailers are not confirming the action. They're acting completely weak, but we understand PDD. We know they have that Temu app. I mean, that's a very new app, and they're pushing to the US. I mean, that might be part of what's going on, but they've got good numbers, and we've been waiting for the setup, and there it is. So we're in there. Yeah, on the weekly, it looks
perfect cup and handle.
Yeah, it looks great as well.
And okay, Wes, we had Uber.
Yeah, we bought this one today, and just breaking the downtrend line. We're looking for liquidity, high quality liquid leaders here too. We see the earnings estimates coming out. It's too, and it's just the price action. I mean, it's been on our list. We owned it. We've sold it. We bought it back, and the earnings are great. I mean, this is more of a turnaround story than not even turnaround as far as earnings growth, right? You can see they never really had a profitable year except for 2018. So that's what this is about. I mean, it's unclear, but anyways, the action, it's above the 50, it broke the downtrend line, and I guess it would have been nice to see a little bit more volume coming into it today, but it's institutional quality. So we are in this 2.5%.
Yeah.
Right. Yeah.
And so you could, I mean, we bought it there, and we're going to press it right there. That's our intention anyway. Buy half here, the next, and then press it, average up, and it right there taking out all that resistance. And then finally
Yep.
this one.
Yeah, BRT. So we bought it on the fall through day as well, and we were kind of, you know, it's leveraged to data centers, and we were kind of debating between this and ANET for that day of what to add, and we went ahead and actually did just 5% in this and no ANET because it wasn't as, I guess, extended in the day, but same idea, good earnings, lesser known name. Relatively recent IPO, which we kind of like to do, and it's been very, very strong throughout this whole throughout this entire year and much of the pullback. So all-time highs, right? That's what we like, hit an all-time high today. Kind of an ugly bar date on the daily, closing at the low, but you know, I guess we're not really holding it for, you know, interest in the day move, but yeah, I mean, this is why we like it. It's 15 billion market cap. That's kind of a sweet spot, I think, of you know, where you've got enough upside and it's still relatively liquid. It's kind of SMCI, you know, is the same, about 15 billion. So yeah, lesser known, but growing in popularity, and look at the RS into new highs and everything. So hopefully we can have a little bit of cushion too. You know, going into earnings in a few weeks. So that's what you have to contend with a lot of these. So don't forget to, you know, check that right every time you're making a purchase in these coming weeks, because you never know. You don't want to get blindsided by an earnings date.
And the sweet spot in terms of the products that they produce, they really produce cooling systems. So with the transition to these, you know, highly sophisticated AI servers in these data centers, they require so much cooling because it's, you know, it's so hot, and these, you know, they take up so much processing power. And, you know, this is what Microsoft and both Meta, that's their two largest customers. So you got the two largest customers, Microsoft and Meta, you know, in an area that's got rapid, explosive growth, and that no one's heard of, doing $1.5 billion to almost $2 billion a quarter. You know, this is a big company. You know, big company with great acceleration, you know, in terms of their numbers. And it's got this has got the best chart. This has got the best chart in our database. You know, there's the earnings report. Look at the quarters. It went higher, that earnings report. Went higher, that earnings report. Gapped up higher, that earnings report. What's going to happen with the next earnings report? It's going to be a good report, we expect, for sure. You know, no one knows for sure until after the fact. But you know, the news that we're getting from NVIDIA suggests that it's going to be another blowout quarter. So, you know, going into new highs, you can see a stock. I mean, we can clearly model a company like this that can go from $40 to $100. And, you know, the only question that, you know, you're going to have, you know, after the fact, you know, a year down the road, is why didn't I own more of it? And Wes mentioned ANET, so this has just been a wild stock, but you know, the numbers
May
are great.
I ask you a question before
Yes,
you can
go ahead.
continue? So this is Pankaj. I was just wondering, how many stocks do you all hold in your portfolio? Because I heard you mention at least 5 or 7 stocks that you bought. So I just wondered how many you hold, and why that's important to me is, you know, because if somebody buys 2% positions in a portfolio versus 5 or 10, 15, 20 percent positions, it just helps me understand their thinking.
And you know, Pankaj, you know, O'Neill, you know, and it's all based on the size of your portfolio. O'Neill advocated, you know, if you had $1 million portfolio, you know, have 4 or 5 stocks. Well, we can't just have 4 or 5 stocks when we've got millions and millions of dollars, that we're managing. But certainly you can, you can have between whatever you're comfortable with, between 5 and 10 stocks, depending on the market environment. So that's a personal decision that everyone has to make. O'Neill, in fact, many times had his whole net worth, and this is a guy, I think that it was worth $1 billion. And this is a guy that had all his money at various times in the leading stock. He always got the leading stocks, and he published a model book, and all this has been documented, before as well. But I know that he had all his money in eBay at one time, and just a number of these big Amazon, these big winners. And so if, we're talking about having 100 million, 200 million in a position. So O'Neill did it better than anybody, but he had, ice water in his veins. And, if you have a net worth of $1 million, it's, it would be tough to put it all in just one stock. But, I advocate from a personal perspective, 4 or 5, but, many times I'll have 10 stocks and be on margin, occasionally, but, just, some number between 5 and 12 stocks typically, might be the right number, to have, where you've reduced the risk, sufficiently. Modern portfolio theory from my classes many years ago in grad school advocated, I think you could get diversification with 11 securities, but I prefer to have more concentration in the best industries and the best stocks. So that's going to lead you to concentration in an industry group, which is, more risky, but that's where you can get the hyper growth in your portfolio.
Thank you, Roy. Very helpful. Thank you.
You're welcome. And yeah, so that ANET was setting up, and I'm trying to shortcut this for you guys, so that you can do your own research, and we'll look at, a few of these, ANET's, looking, great. Earnings are in 20 days, really strong numbers that we've talked about before. We're focusing on the numbers. Looks like it's down 373 aftermarket. So, what might happen is, a number of these stocks might come right back into their 10-day, tomorrow, and consolidate and then go. Actually, that would be a better setup if it would come into the 10-day, and then you buy this stock, taking out that alert that you have, that number right there. So ANET's been showing up. You've got AMD that broke this downtrend line, 2 days ago. So there's AMD, of course, a big competitor, but it's got liquidity, big company, but it doesn't have the strength, but it is breaking the downtrend line, right there. That's a valid buy signal, as well. Google is probably the best FANG stock. Meta and Google, I think, are going to be the two that for sure beat their numbers this quarter. Apple's got poor, abysmal numbers. So I think, I think their phone sales have been very disappointing, and you can see, this stock is right at resistance. This would be a stock that you potentially could short if the market would roll over right here. This is the exact place where you would short it, using today's high as a stop. But the way Apple has moved, you get these periods where they go up, you consolidate, and then they make it, all the way back. So Tesla, Tesla, Tesla's, was, well, it technically the stock, potentially could have been bought right here, but earnings are in 8 days. So earnings are in 8 days and they continue to cut their prices. So margins are going to be impacted. I can't believe that the stock is not down more. So something, and I only think that it's not down more because they're obliterating the competition, by cutting prices. So they've got, I think, 50 or 60% of the EV market. And, that's a big market. And, Ford and General Motors are shooting themselves in the foot. And, with the auto workers, that's, these companies, they won't be solvent in a couple of years if they acquiesce to their demands. The owners acquiesce to their demands. But, Tesla, from, everybody is, that is a Tesla bull. Of course, their site about auto taxis, that's supposedly that's going to be 3/4 of the revenue stream. It's gonna be 3/4 of the revenue stream, while building automobiles are only 1/4. So, with autonomous driving, and then the automatic, robot taxis, that's where the growth potentially is going to come from. And of course, they've got the artificial intelligence component too, where they've spent, billions of dollars in acquiring that information.
Did you sell Uber and Lyft?
Yeah, I'm surprised that I would think that, well, if Tesla's can do that, how in the world is an Uber going to, how is it going to compete? And it's all about the numbers, but initially that's what kept me out of Uber. But the company is turning profitable, and I can't say where the stock's can be a year or two from now. When they finally launch, the auto taxis across the world, but it certainly can be competition to them then. But definitely, Lyft's the laggard. Uber's
Some of the supermarkets are starting to feel the pinch of the weight loss drugs.
Oh, you think
that
so?
People aren't just eating what they used to. I mean, seriously, Walmart has some concern.
So that's, what's interesting is that, these are defensive companies. So, the XLP consumer durables, so these companies are telling you that money is flowing out of what's the Ollie? Yes, the Ollie's, Walmart. What are some of the bargain stores?
TJX.
Dollar General.
TJX.
TJX.
Right, the discount stores.
Okay, yeah, Dollar General, you would think money would be coming into something like this, but DJX. Yeah, this has got an interesting, profile. TJX and ANF, Abercrombie making new highs. Big numbers on this stock, huge numbers on Abercrombie now. Oh, JBL, this is one that's, that's hitting the screen. So JBL, this is at an all-time high. And this is interesting. This is at a 20-year high that it's made just the last couple of months. And we have a friend, John Rote, that talks about charts long-term like this, and he calls this a Brobdingnagian base. And, stocks that finally get to new high territory after underperforming for many years, they, a lot of those stocks look interesting. Like, for example, when Microsoft finally made a new high, I think that took 16 years. When it finally made a new high, then you saw the stock go from 60 to 400. Jabil made a new high, just something to, just anecdotal information. So, this contract manufacturer, but it just made a new high after not doing anything for 20 years.
Hey, Roy, can you take a look?
Yeah.
Can you take a look at the NVO, Novo Nordisk?
LVO?
NVO.
Oh, yeah. Yeah, this stock looks great. So, we bought Lilly, but you got this nice, this is definitely a buy technically right here. So you had the earnings quarter. So you had, the great reaction to the earnings report. They've got two, I think they've got two of the drugs. Is it Ozempic? Is what the name of one? Is that it? Ozempic?
Yeah.
Yes.
Yeah, and then they have one more. I thought Ozempic was Lilly's, but it's not. It's NVO's. And there's the break of the downtrend line. So, oh, look, the stock's up 482 after market. I don't know if this is a good quote, but great action after market. And it was definitely a buy today. It was a buy 2 days ago, breaking this downtrend line, consolidated. And, I almost pulled the trigger on it personally today. And, if it's up 482, then you missed a great opportunity, today, to buy the stock. It's acting great. They just did a 2-for-1 split, recently. Not that matters, but really solid numbers. Really, just solid numbers. Great spot here in a mid cap name. Stock looks terrific. You got 23 days to earnings. It's definitely it's an A+ rated stock in my view. And then another one that's showing up, guys, it's Fabrinet. Okay, so you haven't heard, I haven't heard much about, it's in the contract manufacturing area. This has been typically a group where you have very thin margins, there's a lot of product, very thin margins, but, but it's, I guess, every stock's got its day in the sun. Had a great, the stock reacted great to the earnings report. Earnings are in 27 days. And again, the stock is in an all-time high territory. So you're trying to find the, the diamonds in the rough, what's holding up, what's holding up, and what are the first out of the gate? Yeah, go ahead.
Any thoughts on Duolingo and Qualis? Duolingo and Qualis?
Yeah, okay. So Duolingo, Wes and I, we talked about it. We did not buy for the, for clients. I did buy it yesterday, just from a technical breakout for the trade. But we just don't know how big this business is. How big is the business? Good action, the numbers are good. You can see the classic double bottom, perfect double bottom. Broke out at 162. You had the shakeout, and then the stock, has moved to new high, moved to new high territory. So, technically, technically the stock's broken out, and we'll see how it, see if it'll pull back. We'll see if it pulls back and how it handles the pullback. But that was your breakout yesterday. So you might see this stock, go sideways a little bit and then give you an opportunity. Earnings are going to be, good this year. Earnings are going to be up 18%. We do know they are. A lot of people seem to be using it, using the service. Just how big is the business? Great relative strength. Good. Last quarter's earnings were excellent, and these said QLYS, right? Was this the one?
That's the one, correct? Yes.
Yeah, great action in the stock. This is more confirmation too in that security area. So, it's a smaller, $6 billion market cap. Stock's acting great, broke out perfectly out of that 157.88 pivot. Relative straight lines at a new high. But it is a second tier name too. So I think Zscaler, based on market cap, like who's doing the most business? It's Palo. This is a $6 billion company. Palo Alto Network, 79 billion, which is 10 times the size of QLYS. CRWD, 44 billion, 7 times. And then who's the other one? Zscaler, 25 billion. And doing the numbers are bigger too. See how big these numbers are. So stock's acting great, but it's not the best performer. It's not the best house in the neighborhood. These others are better, but the industry is pulling it up, in my view. The QLYS. The industry is pulling it up. That's just telling you great confirmation in terms of the industry group. See, the industry group's 12th out of 197. And you're going to find, many times you're going to find the best stocks in the top 40 industry groups.
The question maybe though, is the industry pulling up Qualys, or was Qualys pulling the industry up? Because Qualys was one of the first ones to hit new grounds, right?
To hit what?
To hit new grounds, to hit new 52-week highs.
Yeah. Made a 52-week high a year ago. Now it's coming all the way back. Yeah, I see your point. Yeah. Well, that's an interesting look at that. See,
the industry group, Roy, the industry group is price weighted, so this is a significant price, 163. So the industry group indexes will be influenced by this price.
Well, this is when you take a look at it from an all-time high perspective, that gives me pause of what I just said about not being the strongest in the group. PANW, that's actually strong, but is CrowdStrike? Yeah, CrowdStrike's a weaker, in terms of being closer to a 52-week high.
And Zscaler is even weaker.
Yeah. I definitely like the action. I like the action here, but it didn't hit my screen because the numbers aren't as large, but the price action is fantastic.
Thanks a lot for your feedback.
This is also in that sweet spot where they're one of those other companies will, potentially, make an offer, by this company too.
just like what happened to Splunk, right?
Yes. Yeah. This remittance company has been acting well. So, you know, if you want to send money anywhere in the world back to your homeland, this is the company that is doing that. Numbers are, you know, the revenue numbers are really good, but it got my attention. It was, again, it's one of these IPOs that corrected, and now the stock is in this major upturn. See, in a good market, just when this, you know, this stock's clearly bottomed, but, you know, the game, it can get fun when all these stocks are making, you know, when they come all the way back and they're making, you know, all-time highs, not just 52-week highs, but all-time highs.
What about the Enphase? It's a good stock in the past. It was a winner. Now it's kind of had a few tough quarters, lost half of its value, but I think it has a good potential, but the earnings aren't that great.
Yeah, boy, this was, we own this stock. This was, you know, a year ago, it was one of our top picks, you know, ENPH, SEDG, you know, you got that ARRY and Shoals, SHLS that are in the group. But, you know, this is just your classic. What happens, a stock like this, you know, it can definitely bounce, but it could also go sideways for months before it ever, you know, before it moves. It's in an unfavorable group because of interest rates. And, solar's sort of, it's like the home builders, mortgage companies, rates are high and they, you know, you're not putting in solar installations and refinancing, your house. So it's, you know, it's in a really lousy group. Look, it's in the number 2 worst group in the market. Now, you know, if you want to be a contrarian, you know, you could think that, you know, it can only get better from here, and that's quite possible. But, you know, stocks in these steep downtrends, where do they finally bottom? And you just, no predictive value there, just quarter after quarter, you know, they could be dead. We own First Solar too. And that First Solar was, you know, holding up the best, you know, moved up higher on the earnings report. And if this was the best, the best solar stock out there. And we couldn't understand why the stock was holding up while the rest of the stocks were getting hammered, and they finally rolled it over. You know, you can see they finally rolled that over.
Mm-hmm. Yeah.
But I understand, you know, that these guys are completely sold out, or they were completely sold out, you know, for the next couple of years as well.
Mm-hmm.
Let me see. Pepsi had a good report today, and there you can see Celsius had very abnormal action. And you know, the way this a great stock should act is just the way that it acted from this period here. You know, all the way. This is ideal. You know, stair step action, great action. Again, the breakout right there, great action, and then it just became unglued. Very abnormal action right there, busted the stock, and we got kicked out right there on the stock on the reversal down. And we had a really nice profit in this stock. Like, I think we were up 40% in it before this move right down here on the break, which happened, you know, one day and then the second day all the way to the 50-day. And it's rallying back up to the 50-day now. Earnings are in 30 days. This stock, I love the product, and the stock's got great triple-digit numbers. But you normally don't see, you don't see leading stocks do that. That's such abnormal. You can see where I have like a little downtrend line where, if I'm looking for the stock to rally up and then just consolidate before the quarter. But, when you look at it, we look at the perspective. When you look at this on the weekly, I mean, this is a stock that it is below the 10-week. I don't like that it's below the 10-week. But, you get back above the 10-week and, there's, a potential buy point. See where it crossed above the 10-week right there. And, there's the 10-week, right there. So you get a move over the 10-week, which would be a trigger, a trigger to buy the stock back. What other stocks would you guys like to look at?
Cadence, System, and Synopsys, please.
Synopsys. This stock's got great action. Boy, you guys are throwing out some really good stocks tonight. So, I mean, this is, I believe these are the exact types of stocks that you want to look at, QLYS, Synopsys. And, it meets the eye test. And look at this, where it came up to resistance, came in, this did it. This reminds me when Tesla finally broke out, I think of I think 200, before it went to 1,000. And, you had this series of tried to go, like the boy that cried wolf, and then boom, then it finally took off. Just really terrific action, and the stock looks good. Great relative strength. Relative strength line is making a new high. Really solid numbers. Nice market cap. Obviously an institutional favorite. 3,000. Look at these. Look at these A+ rated IBD mutual funds and see. That's what I was trying to point out earlier, is that these mutual funds they're among the best performers, out of all the funds out there. And some were down 40% last year. Just a tough market for growth. And I mean, these have long-term chops. So you have the right company, that's doing your research right there when you know that, well, man, if you've got Fidelity and all their analysts piling into something, you just need to follow the money, follow the money. That's what makes Ken Slim so attractive. Stock looks great, really good earnings. What's it look like on the weekly? Looks fantastic. An A+ rated in this nice upturn. And I think, is Cadence Design in that group too, CD?
Yeah, I think it's direct competitor.
Okay, so you've got two stocks. So that's their competitor, same kind of action. This is really what you want to see from from a group perspective. What was the other one that you mentioned?
No,
Mario?
that's the two. What both the ones I mentioned.
You mentioned CD&S as well.
Yeah. Thanks a lot, Roy.
Sure.
Hey, Roy, can you look at ESTC?
Yeah. This is we got close to buying this. And this is one I bought it personally. And 2 days ago. And what this company does is, I know one of their products, if you go to a company's website, IBD uses them. So if you go to IBD and you go to the search function for all the stories written on a company, or you're searching for whatever, ESTC it provides the backbone to do that. So that's a great niche to be in. Numbers are great. Look at those earnings numbers. 100, 200% earnings numbers, solid revenue growth, great earnings. Small company, 98 million shares outstanding, in terms of shares outstanding. The float, where's the float? Float is 79 million. So, institutions can really move this. And it's a turnaround from, there's the bear market, IPO'd 4 years ago. And now the stock is really getting going. Maybe it's going to launch now, a sustainable earnings period. You can see back in the past, they were losing money. So an IPO that made a transition from losing money to making money, that's what's changed. And, the stock's making a 52-week, I think that's a 50 October, close. Yeah, that made a 52-week high. And the last earnings quarter was, 6 weeks ago. So you got 6 weeks until they report again. And great action. So it tried to go, came in, and then there's the follow through day. So this is, I view this as a really like Nutanix, smaller companies, smaller company, $8 billion that can certainly go to 16 billion. $95 relative strength. Oh, MNSO. This is one of those Chinese stocks that was performing well. So, 131, two Chinese stocks, MNSO and PDD. And, we've been burned in China, a number of times. And it's made us wary, but, this action, this is classic, perfect action. The breakout there, right here, breakout of 19, and the breakout of 2146. You can see a big, reversal today. So, it's holding support at the 10-day. So it's right at the 10-day. And this is easy to draw a downtrend line now on that. So you'd like to see this stock just sort of go sideways, a couple of days and then explode up, breaking that downtrend line. That'd give you an early entry, on it.
Royal, can you take a look at MUSA, Murphy USA?
MUSA. Defensive stock, just like Sprouts, I think Sprouts food. So retail, super mini market, defensive, earnings aren't great. Flight to quality, I would say, Kathy.
Mm-hmm.
I'd say a flight to quality is going on there. Normally you don't have powerful, explosive moves in food stocks. Markets, retail motor fuel products. Okay, so obviously they're selling
primarily
gas.
doing gas station, I think.
Gas stations. Okay. Yeah. Perhaps it's going up, gas prices are rising, margins are increasing. So this is perhaps a beneficiary.
Yeah.
great, great action here, but probably cyclical in nature.
Mhm.
AKAM, Akamai Technologies. This broke out today. So I've been following this stock also from the last earnings report, got the new highs, consolidated. Now there's a follow through day 2 days ago and the breakout today. But I'm not a fan of the decline in the earnings from 537 to 364 this year. DraftKings, DKNG. Decent numbers here, but there's that trend line that it's going to be formidable. Not profitable yet either, but the best gambling stock I think that's out there. As a sport. Nice relative strength, 98, but you had this wide. You'd prefer a tight sideways basing action. You'd prefer action like that before the breakout than this kind of action that we're currently experiencing. You've had some of these building companies like Road that have heavy construction. Look at that accumulation. Look, that's the highest. This is the highest volume in the base since it's been in the base, over the last year. Really good earnings projections this year and next year. Only a $2 billion company. I mean, from a price to sales, this is just dirt cheap from price to sales. It was an IPO. Numbers are great. Looks good on the week. Nobody's heard of this company. I guarantee you. I mean, but you can see that. Let me see if any institutions own it. Yep, you got 300 institutions and one A+ IBD fund owns it. Great action, great action though. What's in the Market Smith Growth 250? Okay, this is the Market Smith Growth 250. And, so energy, coal, pass on that. There's that SMCI. Dell Computer has been holding up. There's Modine Manufacturing that's in that building area as well. This group's been, quite strong. You've had this rotation in oil though, so so you've had this rotation out of oil stocks as prices, as oil plummeted. There's that FN and Jabil and Flextronics. This STRL has been acting great. So you've got, Market Smith Growth 250 is nice because it's the number one, and it's based on 30 screens, I think, that Mike Webster came up with, but it screens by industry group first. And so, it's going to show you who are the top performing industry groups. And normally, you can get some really, positive action when you see stocks that move up in the industry group ratings. See, there's Palo Alto Networks, CrowdStrike, Zscaler, Qualys, giving you confirmation, just giving you confirmation. There's that Splunk and Elastic, Lilly, Duolingo, Spotify's looks like it's turning the corner. See, all these stocks that that have gotten hammered that are coming back. I mean, these are all CanSlim stocks. And they're just simply setting up. And with the true, if we embark on, then this is the true beginning of the next market cycle in growth stocks. You're going to see wave after wave of these stocks, moving higher. And again, it's the stock, watch the stocks to see that are going into new high territory first. And I'll show you a screen that I think is really valuable as well. You can please take a look at this bar charts. And do you see bar chart on your screen right here, guys? Or not?
Yes, we see the website. Yes.
Okay, good. Okay.
Yes.
This is a very useful site because you can easily, I always look at the new highs and new lows list, because you remember you're going to need a number. This is where the action takes place. When all these stocks, this is what I'm looking at. What are the stocks? The first stocks making brand new 52-week highs, and what are the stocks making all-time highs? And so bar chart has a screen here, not just 52-week. You can get that on MarketSmith as well, but this is the only place that I've seen all-time highs. And so these are the stocks that have made not just 52-week highs, but all-time highs. See that FN's there. There's that Cadence Design. The CBOE's been setting up. We'll take a look at that one. And Jable Circuit, Modane. There's that QLYS. There's this XPO that's had an amazing run as well in the transportation area. Guys, we'll go just about 5 more minutes and then we'll call it a day. Would you like, any input that you would like to make? Just feel free. If you have any more questions, just hit me with it. Any stocks you'd like to look at, let me know, and we'll just conclude here momentarily.
Modine Manufacturing, any thoughts on that? Modine, M-O-D, Modine Manufacturing.
Really good numbers, great numbers, 99 relative strength. It's in this, I guess the only thing negative about this is that it's sort of in a cyclical business, and maybe these stocks are holding up because of the infrastructure bill, but the numbers are clearly good. And you don't think of this as like being a typical growth stock that can, double or triple in price, but he's got a great chart. And look at that. That's going into like 20-year. That's impressive right there too.
Would you mind sharing the screen with us?
Pardon me?
At least I can't see this the chart.
Okay, hold on. Maybe I didn't. Where's my screen?
Thanks, Roy.
Where? Oh, okay, here we go. Sorry about that. Screen one. Do you see Modine on the screen right now or not?
Perfect. Thanks a lot.
Okay. So there you have it, all-time high territory. That's quite impressive. Definitely, I definitely need to take a look at these companies. I mean, great action, 99 relative strength. A dull business that, who cares what they do? The numbers are outstanding. And, if they're selling whatever automotive OEMs, they must be selling a lot of them. Great chart. It looks excellent.
They're selling, as far as I understand, they're selling cooling systems to automotives as well as data centers. So similar to the stock you mentioned earlier, I think it was Vertiv, if I'm not mistaken.
Oh, really? Okay.
Yeah.
Okay. And who are they selling those to?
Don't ask me the details, please.
But the stock's definitely acting fantastic. Guys, I think I'm going to call it a night. Thank you guys so much for attending. I hope that we, had a productive evening. I hope that we brought up a number of stocks that we can make a lot of money with. And I certainly wanted to encourage you. This has been a tough time in the market for us, in this strategy and in this style, but I've done this 3 decades, and you can have 1 or 2 of these stocks to make your year. So whatever you do, don't give up. Watch the new high list. Anybody can do it. We just need the right market environment. And then like a 2020, you can make life-changing money. It is coming. It's coming sooner maybe than you think, because because the market has been so narrow, and we just need to see the breadth widen out, and then all these stocks are going to start popping, and they're not going to just go up 10% and then roll over. They can get, you're going to have big moves in these stocks. They're going to go up, 20 to 50% between that 13-week period of time from one earnings cycle to the next. And that way you'll know that, that it is a potential, one of these true market leaders that lead all these major upturns. So that's all. We will call it a night then. Thanks for coming tonight, guys.
Thank you, Roy.
Thank you, Roy. Thank you, Will.
Thanks a lot.
God bless, guys.
Have a good night.
Bye.
Bye.
Thank you, Roy.
Roy.